Imagine waking up tomorrow and realizing the money you worked so hard to save has quietly lost a chunk of its buying power overnight. Groceries cost more, rent is higher, and every dollar in your wallet stretches a little less than it did yesterday. You'd probably feel uneasy, maybe even a little panicked. Now imagine that happening not just in your household, but across the entire country. That uneasy feeling is exactly why gold is suddenly the talk of the town. People everywhere are racing to get their hands on it. But here's what surprises me. Hardly anyone is asking the most important question: why? What is driving this massive, unstoppable surge in gold demand? And why are the people in charge so quiet about it? Thanks for joining me today. I'm glad you're here because this conversation matters more than ever. Welcome to USA Finance Hub, where we break down the trends shaping your financial future. If you've been paying attention, you've probably noticed gold prices hitting headlines again and again. You see the charts moving up. You hear the chatter from investors and analysts. But very few people stop to dig into the real reasons. They see the excitement, but not the warning signs flashing behind it. That's what we're diving into right now. Because understanding the why behind this gold rush could protect your wealth, and maybe even your peace of mind. The first thing you need to realize is that gold isn't just another commodity. It's a signal. It's like a fire alarm for the global economy, ringing loudly to tell anyone who's listening that something is wrong. Unfortunately, most people are ignoring the sound. But ignoring it won't make the danger go away. In fact, the U.S. financial system, along with many others around the world, is carrying debt at levels we've never seen before. Currencies are eroding in value. The purchasing power of every dollar is shrinking. And the policies meant to fix the problem often make it worse. If we continue down this path without paying attention, we risk going down with the ship. That's not drama, it's reality. The choice is stark. Either sink with the system or build your own lifeboat. Gold, in many ways, is that boat. Let's talk about what's really happening. Central banks, the same institutions that set monetary policy and back government spending, are buying gold at a pace we haven't seen in decades. They're not buying paper gold or exchange-traded funds. They're buying physical bars and coins, moving them into their own vaults. Sometimes even repatriating gold they once stored overseas. Think about that for a second. These are the people who understand the monetary system better than anyone. And they're quietly shifting their reserves out of paper assets and into a metal that has held value for thousands of years. If that doesn't make you sit up and pay attention, I don't know what will. Why the rush? Because the global economy is changing in ways most of the public hasn't even begun to grasp. The era of fiat currency money backed only by government decree is showing its cracks. History is clear on this. No fiat currency lasts forever. Eventually, debt piles up. Governments print more money to cover their obligations, and the currency loses its value. We've already watched this cycle play out in other nations. Now the warning signs are flashing here too. You can already see it in rising deficits, endless borrowing, and the quiet acceptance of policies that debase our money year after year. One of the clearest signs is what experts call de-dollarization. Countries around the world are slowly stepping away from relying on the U.S. dollar for trade. They're signing deals in their own currencies, reducing their dollar reserves, and yes, buying gold instead. This isn't theory, it's happening right now. Central banks are swapping U.S. treasuries for gold, the same way you might move savings from a risky bank into something safer. They know that sovereign debt, once considered the safest investment, no longer feels like a true reserve asset. And when the institutions that issue money decide they trust gold more than their own paper, that should tell you everything. Investors see it too. Gold exchange-traded funds in the U.S. have ballooned to record levels with hundreds of billions under management. Over just a couple of years, the value of these funds has doubled. Institutions and everyday investors are clamoring for exposure. But remember, the smartest players, the central banks, aren't settling for paper promises. They want the real thing they can hold in a vault, beyond the reach of market chaos or political games. This surge in demand is not random. It's driven by a perfect storm of triggers that any thoughtful person should understand. Start with currency crises. Around the globe, paper money is weakening. Debasement, the steady erosion of a currency's purchasing power, has gone from an accidental side effect to an open policy. Governments know that printing more money reduces the value of what's already in circulation, but they keep doing it because it makes massive debts easier to manage. That's great for them, but terrible for you if your savings are stuck in dollars. The middle class feels the squeeze first, as everyday costs climb faster than wages. Next is the collapse of trust in the system itself. When people stop believing the numbers, the data, or the promises from central banks and governments, they look for something solid. Weak money breeds unrest. History shows that when currencies falter, political and social tensions rise. Even major institutions are now admitting that fading trust could threaten economic stability in the United States. If you sense that confidence is eroding, you're not imagining it. Then there's inflation, the silent thief. If your savings aren't at least keeping up with inflation, you're effectively losing money. Gold has a centuries-long reputation as a hedge against this problem. It doesn't promise wild growth, but it holds value when paper money can't. Add to that the sheer volatility of today's markets. Rolling crises, sudden defaults, massive swings in bond markets, investors feel it and react by running toward safe havens. Gold becomes a natural refuge when everything else feels unpredictable. Another powerful driver is the desire of nations to escape the weaponization of the U.S. dollar. For decades, America has used the dollar's dominance to enforce sanctions and influence global policy. Now, other countries are saying enough. They're building systems to trade outside the dollar and stockpiling gold so they can't be cornered by U.S. financial pressure. This is a quiet but profound shift. And we can't ignore the long-term reality of persistent inflation and government deficits that outpace even defense budgets. Leaders may lower interest rates or pump more money into the economy to manage debt payments, but those moves almost always come at the expense of everyday people. You and I foot the bill through higher prices and weaker savings. Finally, looming over everything is the possibility of a global monetary reset. No one knows exactly when or how it will happen, whether triggered by war, political upheaval, or a chain reaction of economic failures. But history shows that every empire built on fiat currency eventually reaches a breaking point. When it does, the currency can collapse to worthlessness almost overnight. Gold has survived every one of those collapses. All of these forces are converging right now. It's not about panic. It's about preparation. You don't need to predict the exact day or hour of a crisis to protect yourself from it. You just need to recognize that the system is fragile and take steps to safeguard your future. Gold isn't about getting rich quick. It's about preserving what you've earned when everything else is at risk. So what does building your own boat look like? It starts with asking hard questions. Where is your money stored? How exposed are you to a currency that could lose value faster than you expect? How much of your savings is tied to promises from institutions whose trust is fading? The answers may lead you to diversify, owning some physical gold or silver, for example, or other assets that hold intrinsic value. It's about creating a moat around your wealth so you're not at the mercy of decisions made in a distant boardroom. Remember, central banks themselves are quietly taking these steps. They are the ultimate insiders, and they're not waiting for a press conference to tell you when it's time. They're already acting. You can too. As we wrap up, Here's the bottom line. The debt crisis isn't slowing down. The dollar's purchasing power is eroding. Trust in the system is slipping away. Pretending it isn't happening won't protect you. You can stay on the sinking ship, or you can build your own boat. The choice is yours. Thank you for spending this time with me. If you found this conversation useful, share it with someone you care about so they can start asking these questions too. And if you haven't already, subscribe to USA Finance Hub so you never miss a deep dive like this one. Our goal is to give you the knowledge and tools to navigate a world where the old financial rules no longer apply. Stay informed, stay prepared, and remember, gold isn't just a metal. It's a signal. Listen to it, and you might just stay afloat when the storm hits.